What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we had a strong bounce off of the breakout retest, and we are now ready to battle the big bear. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday in SPY we had a very strong bounce off of the breakout retest, going up 2.38%. And as you can tell by the chart, we are sitting right at the resistance level, which is the critical risk level that defines this bear market, which is SPY 390. And that is where the bulls will need to break above to say that the bear market could be possibly ending. Now, if you are a bull and you are riding this wave, you were setting your risk at the breakout retest at 378, and you would have never got stopped out of being long. And right now, as we start approaching SPY 390, this is a great time to start locking in some profits. But you can still stay bullish as long as we're above this support trend line and maintaining higher lows and higher highs. Remember, I always tell you, do what the chart is saying and do not have a preconceived bias of where the chart should be heading, because for all we know, SPY could continue to march higher and we could continue into a bull trend. So right now, what we see from the chart is that we're at very critical resistance. So this is definitely a time to start being patient and waiting for confirmation of the next breakout. And the next breakout should take us up to the 200 simple moving average or our resistance trend line. So yes, we can go higher, but we need the confirmation of the price action breaking above SPY 390. And it goes without saying that this is very attractive risk reward ratios for the bears, because we are still in a bear market. They are going to show up at these strong resistance levels, and that's why we have the picture of the bear there. So be cautious as a bull near resistance, and as a bear, this is your time to consider sticking your neck out and start taking on risk, because we are reaching some very critical resistance areas. Now, I will caution you, if you're getting bearish, you are going against the short-term uptrend, and we are seeing very high volume buying. And when you get high volume buying, you really need to start considering the fact that the market is trying to reverse the old trend and starting to build a new trend. We have multiple days of high volume buying and very bullish engulfing candles, and you should never ignore that, because the definition of being unbiased is following the price action and trend. And right now, price action and trend are still bullish in the near term. If we break SPY 390 and continue marching higher, the medium term will also be bullish, and then we can continue to build on that bull trend. So as a bull, manage your risk right here at SPY levels of 384 and 378. And if we start breaking below that, then you can instantly start getting a lot more bearish. On the NASDAQ 100 triple Qs, we were up 3.06% on Friday, and the triple Qs had a very high volume bounce off of that positively sloping 20 simple moving average. But as you can tell, the triple Qs are not looking as bullish as SPY and are still very far away from battling the big bear. The big bear is all the way up here at 293, so that could mean the tech sector is lagging behind and trying to catch up. And when we go over the Dow Jones, you are going to see the Dow Jones is looking very strong. So the tech sector has been absolutely routed and getting beaten into the ground, with stocks like Meta and Amazon dropping very large percentages after their earnings reports. Critical resistance on the triple Qs will be 282 up to about 284, and then we have strong resistance at 288 and the critical bear market resistance level at 293. Downside support to stay bullish is going to be right around 278 and 273, and you instantly need to get a lot more bearish if we lose support at 273, because we are very likely coming down to retest the lows in the 250s. In the Dow Jones, we were up 2.53% on Friday, and you can see the Dow Jones is looking incredibly bullish. Ever since we got that double bottom breakout, I told you the price target was 320, and we blasted right through 320, broke out to a new daily high above 325, and closed above the 200 simple moving average. If you bought the Dow Jones at the absolute high of the bull market and you held all of this time, you are down less than 10%. So without a doubt, the Dow Jones is looking the strongest, and it's starting to show evidence that it could be out of the bear market with the decisive close back over the 200 moving average. Now, I will caution you, we did close over the 200 moving average back in August, and as you could tell, we gave all of those gains back. So I continue to remind you that the bears will start attacking at these resistance levels, and the next critical resistance in the Dow Jones is going to be right around 332 to about 334. So we're getting into very attractive risk reward ratios for the bears, which is going to put more selling pressure on the market, but we are going up on very high volume, and we do have a support trend line with critical risk levels at 324 and 319. As long as we're above that support, you can stay bullish. But if we lose the support trend line, we could come back down to retest the breakout at 312 or fill the gap at 311. On the Russell 2000 IWM, we were up 2.27% on Friday, and again, we're looking very bullish because we have the double bottom breakout above the neckline at 176 with a valid price target at 188, which is also our 200 simple moving average. I expect the small caps to hit that price target because we saw it in the Dow Jones and we do have bull trends. Critical risk levels in IWM will be 178 and 176 and stay bullish as long as we're above those levels. On the ARKK ETF, we were up 2.69% on Friday, and ARKK is still looking relatively bearish, but we did get a bull breakout above the resistance trendline, and we did close back over our other resistance trendline at 38. We're still below a negatively sloping 50 EMA, so the next bull breakout will be that break above 40, and then the previous daily high at 41, and then we will have strong resistance at 43 and 47. If we can break above all of that resistance and start building a bull trend, then we can start getting more bullish, but right now you'll be looking for a rejection right around $40, with downside support right at 37 and 36. On the VIX, we were down 6.02% on Friday, and the VIX is just getting crushed down in a straight line, and you can clearly see fear is very quickly leaving this market as we continue to build the bull trend. As you can tell, the VIX is crushing down towards 24, which we could find support at that level, and we really don't see volatility leaving the market until the VIX starts getting down below 20. So while we are still in a volatile market, I always tell you volatility works in both directions, and right now we are getting a face-ripping bear market relief rally or the very early beginnings of what could be a bull trend. So right now the VIX is saying fear is leaving the market rapidly, so do not ignore that. On Bitcoin, we still have the bull breakout above 20,000 because we finally did get the breakout of the trading range, and we did get a back test of the breakout, and so far 20,000 did hold up as support, and we're beginning to bounce yet again. So our upside price target is still valid up here at 22,000. If we break down below 20,000 of support, look for other support right around 19,800. On Amazon stock, we were down 6.8% on Friday because we did see a very drastic overnight gap down after earnings, and we were just way outside the lower Bollinger Band, and we instantly started to see high volume buying back above that next leg lower at 102. While we do have the next leg lower of support at 102, you need to be cautious of a falling knife scenario, but I do think we will see Amazon trying to march back up and closing this gap right around 110. Look for resistance on the way there at 106, and if we break below 102, look for a retest of the low down here right around 98. On Microsoft, we were up 4.02% on Friday, getting that strong bounce off of that support zone right around 225, and we're right back above 233, but we will have resistance at the 20 simple moving average at 237. Above 237, look for resistance at 242 and 247, and if we break 247, that will look like a bull breakout. Downside support will be 233, 225, and 219. On Nvidia, we were up 4.99% on Friday, and we did get the bull breakout above 135 and closing back over the 50 EMA, so the next upside price target will be the gap fills at 142 and just above 149. So look for the next bull breakout to be holding above 135 and continuing to march higher into the 140s. If we break the support at 134, look for the next support right around 124. On Tesla stock, we were up 1.52% on Friday as Tesla is battling to break through this resistance just below 230. If Tesla can break above 230, we'll likely start marching towards the 50 EMA at 250, and downside support will be at 222 and 209. On Apple, we had a very high volume buying day on Friday, going up 7.56% and closing well outside the upper Bollinger Band and finding resistance at the 200 simple moving average. Remember, Apple is a market moving stock, and this is a very bullish development for the indices as a whole, but we will have very strong resistance right here at 157. Above 157, the next upside price target will be 163, and critical downside support will be 152, 150, and 147. The financials were up 2.49% on Friday, and we did get a bull breakout above the resistance trendline, and we're very close to fully closing the gap just above 34. The industrials were up 2.33% on Friday, closing right below a negatively sloping 200 simple moving average, so if we do continue to go higher, you'll be looking for the gap fill just below 96. The healthcare sector was up 1.64% on Friday, still holding up above the 200 simple moving average and marching higher towards that resistance at 134. The energy sector was up 0.35%, continuing to find resistance around our resistance trendline right around $90, and the next upside resistance will be 92. You can stay on this bull as long as we're above 84 or the support trendline at 87. So jumping back over to the S&P 500, without a doubt, the bulls are pushing, but it's time for the bulls to battle the big bear, and we are going to know very soon who is victorious. Remember, I always tell you to be unbiased and follow the price action and trend, And right now, while we do have bullish price action and trend, I will caution you to be very careful at this very critical resistance area. Sometimes it's better to just sit in cash and wait until you have clear direction. And right now we are sitting at the critical risk level that defines this bear market. So there is no clear direction until we see who is victorious at this level. If the bulls are victorious, we're very likely going to start into another bull market. But the bears could show up here and continue to drive us down lower, and this could still just be another lower high in a bear market. We'll know very soon, so this is a great time to be in cash, sit back, and wait for the charts to tell us who is going to win this battle. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can find out more about Bank or how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. But thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.